Ichimoko cloud is a versatile indicator that defines support and resistance, identifies trend direction, shows momentum, and provides trading signals. Even though the Ichimoko cloud may seem complicated when viewed on a price chart, it is actually a rather straightforward indicator. The concepts are easy to understand, and the signals are well defined. Ichimoku takes multiple averages, plots them on a chart, and uses these figures to compute a cloud, which attempts to forecast where the price may find support and resistance in the future. The Ichimoku cloud consists of 5 lines: conversion line, baseline, lagging span, leading span A, and leading span B. First component, conversion line, also known as Tenkan-sen. The conversion line shows the short-term price momentum. On its own, it shows the midpoint price over the last 9 periods, which is the default value for this indicator. Conversion line signals an area of minor support or resistance. If the market price is above the conversion line, this indicates a short-term upward momentum, and you would want to concentrate on buying signals. If the price is below conversion line, this shows a short-term downward momentum, and you would want to search for selling signals. An increasing conversion line, meaning an upward slope, indicates an upward trend. A decreasing conversion line, meaning a downward slope, indicates a downward trend. Due to the very short-term nature of the indicator, it isn't typically used on its own, but rather used in conjunction with other elements of the Ichimoku cloud. Second component is the baseline, also known as the Kijun-sen, or the confirmation line. The baseline serves as a signal for support and resistance levels on medium term. The baseline is the midpoint of the high and low price over the last 26 periods. On its own, the baseline can also be used for analyzing price momentum. When the price is above the baseline, it means the price is above 26 period midpoint and therefore has an upward bias. If the price is below the baseline, then it is below the midpoint price and therefore has a downward bias. An increasing slope of the baseline indicates an upward trend, and a decreasing slope of the baseline indicates a downward trend. Unless there is a very strong trend, the baseline will often appear near the price. When the baseline is often intersecting or near the price, it isn't as useful for helping to evaluate the trend direction. Third component, lagging span, also referred to as Shiku span. The lagging span is created by plotting closing prices 26 periods behind the latest closing price of an instrument. This lagging line is designed to allow traders to visualize the relationship between current and prior trends, as well as to spot potential trend reversals. One of the key ways to use the indicator is to view its relationship to the current price. When the price is below the lagging span, this is usually an indication there is strength in the price and is moving higher. When the price appears below the lagging line, this is often an indication there is weakness in the price. If it appears that the lagging span is about to cross above the prior price line, it would be a bullish confirmation sign, while a span that is crossing underneath would be a bearish confirmation sign. Trading signals based on the Shiku span are strongest when it doesn't touch or cross over any of the prior candles. Any intersection with the past price line is an indication of a choppy or sideways market. If the lagging line is descending quickly into a past price line, it would be a sign of exhaustion for the instrument. The fourth component is the Kumo cloud, which is formed from 2 lines, leading span A and leading span B. The Kumo cloud provides support and resistance levels that can be projected into the future. This sets the Ichimoku cloud apart from many other technical indicators that only provide support and resistance levels for the current date and time. The uptrend is trended when the leading span A, the green cloud line, is rising and above the leading span B, the red cloud line. This situation produces a green cloud. Conversely, a downtrend is reinforced when the leading span A, the green cloud line, is falling and below the leading span B. This situation produces a red cloud. Because the cloud is shifted forward 26 periods, it also provides a glimpse of future support and resistance. If it's thick, then the support and resistance is strong, depending on the position of price in relation to the cloud. By contrast, if it's thin, then the support or resistance levels are considered weak. Generally, if the price is above the Kumo, then there is an uptrend in place and more buying opportunities. If the price is below the Kumo, then it's under resistance, and it's better to be looking for shorts instead of longs. The longer price action stays above or below the Kumo, the stronger the trend, and the more support and resistance the Kumo offers. The Kumo can be very effective for long-term traders, as well as for trend and momentum traders. This is because the price will stay on one side of the Kumo cloud during a trend. The farther the price action is from it, the stronger the trend and more volatile it is. Generally, you would want to avoid trading inside the Kumo cloud, as it signals a period of indecision. As a type of moving average system, Ichimoko signals are generated by crossovers of the key lines, namely conversion line and baseline. When the Tenkan conversion line crosses above the Kijun baseline, it generates a buying signal. A signal to sell appears when the Tenkan, the conversion line, crosses below the Kijun baseline. But in Ichimoku theory, the signals are not created equal, and this is where the cloud comes into play. If the two lines cross to the downside, while current prices are above the cloud, only a weak signal is generated. The strongest sell signal appears when the downside crossover occurs while prices are below the cloud, essentially signaling that fresh weakness is now evident within an overall downtrend. The same guidelines apply to upside crossovers, generating buying signals, and the location of the current prices to the cloud, with the strongest buy signal coming from an upside crossover while prices are above the cloud. Here are several examples of conversion line baseline crossovers with Kumo cloud as filter. The lagging span provides yet another way to evaluate the strength of the crossover signals given by the conversion line and the baseline. Remember that the lagging span is simply today's closing price projected 26 days into the past, providing a clear look at today's market level relative to earlier prices. If a sell signal is generated on a downside crossover and the lagging span is below the price candles, the signal is considered stronger. If a crossover to the upside occurs and the lagging span is above prices, then a higher probability is attached to the buy signal. Again, the idea is that a crossover in the direction of the overall trend is considered more powerful than one that is against the trend. The crossover between span lines forming the Kumo cloud is another trading strategy used by traders in a similar fashion to a moving average crossover system. However, remember that the lines of the cloud are projected forward by 26 periods. When leading span A of the Kumo cloud crosses above the span B and prices are positioned above the Kumo cloud, we have a strong buy signal. When the span A crosses below span B and the prices are positioned below the Kumo cloud, we have a strong sell signal. When span A crosses above span B but prices are positioned below the Kumo cloud, we have a weak buy signal. And when the leading span A crosses below span B, but the prices are positioned above the Kumo cloud, we have a weak sell signal. Another trading technique involves the Kumo cloud breakout. This signal occurs when the price cuts through the Kumo cloud. When the price enters the Kumo and breaks its upper line, we have a bullish signal. And when a price enters the Kumo and breaks its lower line, we have a bearish signal. If the price is clearly above or below it, when the price action breaks the Kumo, it can often signal a reversal. There are several factors which increase the chances of a reversal, such as the thickness of the Kumo when broken, the amount of time price action has been on one side of it, how far price action has moved before touching or breaking the Kumo, and also the time frame. Ichimoko relies on only 3 different time periods in its calculation, 9, 26, and 52. Japanese financial markets used to be open for trading on Sundays, meaning that the trading week was 6 days long. As a result, the number 9 represents a week and a half of trading. 26 equals the number of trading days in a typical month, 30 minus 4 Sundays. And 52 equals 2 months of trading days. Japanese markets now trade only 5 periods per week, so some practitioners of Ichimoko suggest revising the parameters to 7, 22, and 44. In my experience, however, the traditional default settings of 9, 26, and 52 have performed the best. Ichimoku does have its limitations. Let's face it, the indicator can make a chart look busy with all the lines. To remedy this, depending on your trading needs, certain lines can be hidden. For example, all the lines can be hidden except for the leading span A and B, which create the cloud. You need to focus on which lines provide the most information for you, and then consider hiding the rest if all the lines are distracting. Another limitation of the Ichimoku cloud is that it's based on historical data. While 2 of these data points are plotted into the future, there is nothing in the formula that is predictive. Averages are simply being plotted in the future. The cloud can also become irrelevant for long periods of time, as the price remains way above or below it. At times like this, the conversion line and baseline and their crossovers become more important, as they generally stick closer to the price. As always, if you found value and learned something new, leave us a like to show your support, subscribe to our channel, and click the bell icon to stay notified when we release new videos. Until next time.